on YouTube? I'm back with another trading video. See, we out here in Michigan. It's already snowing already. Before I get started with the video, I need everybody to like, comment, share, and subscribe. So this week's video is trade of the week for gold. I actually called this trade live on a live trading room with TGFX. So you can click the link in my description and you can use code 𝐥𝐤𝐤 for 20% off all memberships in the live trade room. So I'm gonna get finished with this and I'm gonna see y'all over at the charts. All right, so let's get into this trade of the week. But before I get started, I gotta shout out my guy Zach Carson in the Discord. He actually passed phase 2 on his FTMO challenge in just one trade, taking this US oil buy that I called on November 15th. It was an awesome trade. He got caught 1 to 11 on that trade in just one trade. Phase 2 is completed. So shout out to you, man. Shout out to the TGFX family. You can click the link in my description. You can get 20% off anything that's on the site, including the live trading room, by using promo code 𝐥𝐤𝐤. There also is going to be a lot of Black Friday sales going on as well. So make sure y'all tap in. Ray and Dustin are calling great trades on the platform as well. But since I didn't actually call the parameters out for this trade, he just was able to get in and take that one. I actually want to break down the trade that I called and call the parameters for here on gold. So this was actually Monday, November 14th, and we called over 175 pips on that live trade with a 1 to 9.25. So I'm about to break this down. So what I was seeing here on gold on a daily time frame is that price was maintaining that bullish pressure. We was continuing to build bullish continuation order blocks to the upside, and we actually closed above a higher time frame level of supply that Friday. So before Monday is coming in, I'm already keeping that indication that price is maintaining very bullish at this point. So I want to see from this level of supply, is price going to continue to the downside and sell, or continue to move to the upside and continue these strong bullish moves we have seen previous with the week before. Even though these were like CPIs and news and stuff like that, we could still continue to look for that buy from this point. So as prices coming into Monday, coming into New York session, what I'm watching here is to see how price is reacting. So what I noticed first is that price is not taking out any short-term lows as of yet. It just actually came, wick down, created a strong bullish engulfing to the upside from this point. So here's when I'm going down to the 15-minute to say, okay, did price at least break structure to the upside on my lower time frames first before I can look at this continuation for a potential buy? So what we do have is a 15-minute break of structure here. And I actually see it on the 20-minute time frame. If we hit play, price created here a bullish continuation order block. That's very important because, you know, those order blocks pretty much tell us everything we need to know as far as if price wants to continue in price in its direction, or if it's going to actually start reversing and give us that confidence we need to enter and hold in these trades based off these continuation order blocks. So at this point, I also am noticing a left head, right shoulder transition, pushing price to the upside. And then if we go down to the 5-minute, now I want to see, okay, is price going to hold at this point, or is it going to continue to push back lower? Because if we look at this from a 15-minute standpoint, we could see price ultimately from this level pull back a bit deeper and then take a buy. But seeing those continuations, we know that price, especially with gold, if it's ready to take off, it's gonna go. You know what I mean? So at this point, I'm watching it. I see price just tap right back into this level, create this another bullish continuation order block here in the 5-minute. So to protect our order, I got us in here, and I told everyone to place their stops below for about a 20 pip stop loss from this point. And then from the 15-minute here, we can see I actually called this. So I called a 1 to 3, 1 to 5, and then my last target was that 1 to 9.25. Go up here and hit play. So we easily hit our 1 to 3 very fast here and started to come up into the 1 to 4, 1 to 5 range. And sometimes we'll go, you know, we'll chop around a little bit, never coming down to our stop loss. And from this point here, as I'm watching price build out And this is going to be key for everyone that's having trouble holding trades. When you see, again, this video should just be called continuations, because when you see these continuation order blocks build on the 5-15 minute, this will protect our order if the buys want to continue. So I placed my stop loss right above this point here to let price play out. As long as this was maintained, I caught a good amount of my profit on the way up. Took most of my partials up at the top once the 1 to 5 was hit, but I got the rest to run at my stops at break just below this level, so a bit in profit to see if I can maximize and get that actual 1 to 9. And then we see price ends up coming in late Asian session, actually London session, never comes and breaks below that low, and not too long after, boom, price comes and hits that level late in the night. So this one I actually woke up and was like, oh, okay, boom, everything was hit, all take profits was hit, and sent that in the chat. So again, I hope this episode helped you guys. I want to keep these fast, simple, something for you all to understand. Again, so this week I will have openings all throughout the weekend for one-on-one sessions. Go ahead and click the link in my description, and if you're watching this, I will have a special code for you that you can use. So if you played it all the way to the end, I will have a code that you can use, and I'll place that in there if you do send me an email. So again, always invest in yourself, and I'll see you guys in the next video.